Morning, everybody. How are we all doing? How's everybody this morning? Happy Wednesday. Morning, Danny. Kiora. Kautau. Maori for hello, is it? I did not know that. Morning, Callum. JC, Virginia, Baggy, Church, Sarah, Paul, Monkey, Mustafa, Thema. How are we doing? Thema? Themba, even. Happy Wednesday, Bogdan. Right. So this morning I've just closed out New Zealand dollar, US dollar. That's my pen. Which was the final part of the New Zealand US position. So first entry, oh God, that long ago, I need to zoom out. First entry was there. Excuse me, second entry there. Two too close together there, one up there. So I closed out some of it yesterday, some of it the day before, and the final bit today. Basically, that target, as you can see, was a TP hit because obviously I set target at that high, which it's currently bouncing off. So it's a very uneven retracement on this leg at the moment. So it is a 38 retracement. Bit difficult to tell what's going to happen with this one because we just don't know really what's going to happen with this US dollar at the moment. But so yeah, bit of profit in the bank this morning. Other than that, just got everything else on. I have taken a new position today on the yen. Probably going to regret it. But we had a big strong move on the yen yesterday. Very strong move to the downside. I don't think it's going to be sustained. I think it's going to be sort of that kind of move. However, this morning it does seem to be rallying a fair little bit again. But I was looking for news, expecting to find some kind of safe haven run news on this, and I can't really see any reason for this yen Swiss move yesterday from a worldwide event perspective. So I decided to take a yen long. The reason I've chosen the Aussie dollar is because the Aussies are the only ones that are not reducing interest rates at the moment. So the likelihood is the Aussie will be sort of neutral to strong over the coming weeks. Everybody else is expected to be reducing interest rates, which should weaken their currency temporarily. So of all the bunch, kind of this is the best. And it was a massive ADR yesterday. So ADR is 107. We got 230 off of this yesterday. So it's over 200 ADR moved to the downside in 24 hours. The other reason I've taken it is because we're at a beautiful accumulation support. So we had this little accumulation down here. We broke to the highs. We rebought it. We tested it again. We rebought it. Every time we've tested it, we've rebought it. We're testing it. I'm assuming we're going to hold it. So target on it, I haven't really set one yet, but somewhere in there. However, it could obviously rally all the way up to the top. So news-wise today, we've got the Canadian dollar interest rates. If that suddenly powers up or weakens the US dollar, we could have quite a large move in either direction. So there's a lovely little backup propulsion gap. I say little, it's a big backup propulsion gap down here at 150 ADR. So if it screams down today on any news, second entry will be taken down there. And then we're looking at somewhere in the region of a 4 ADR move in 48 hours. So they're going to want to undo that at some point. So first entry taken on that one today. Other than that, just still got the euro exposure on long. And that's it. So I need to get some risk on. So today we've got CPIs. Let's just quickly look at the open before I go for the news. DAX and FTSE both broken to the upside today. So DAX 5-minute, pre-market opening range is just that one candle, which was 316. It's a fairly big old candle, isn't it? A lot of volume coming through this morning. We're already at 2R. It's a big, fast break, isn't it, today? What should I do with that? Should have been paying attention to that. I'm going to take half of that one off. Actually, I'm going to take half of both off. Had a really good day yesterday again on all the indices. So SIH and ORB on an absolute roll at the moment. So I'm just guaranteeing the morning be profitable. So that's £300 in the bank, and I've got the rest of it running. So I've got another 300 running. We'll see if we can get a big, strong break today. Obviously, the market looking like it's wanting to profit take on the sell orders. I guess upside wise, I'll just go for ADR today. See if we can get an ADR move out the gates. Really come to life, all of these. So beautiful break, nice and clean. If you're taking the 5-minute ORB, that's going to be far too big to trade on both of those today. So it won't trade the 5-minute ranges unless you've obviously set your ranges different, which is fine. Max range is 355, opening range is 700. So ADR on that is 177. So that's 70. So 140. Probably 35-40% of ADR just gone in at the open there. That's a huge opening candle. 32 on the FTSE. 78 is ADR. So you've put in nearly 50% again there. So maybe the wrong decision to get out of that after a move of that size, but I'm just worried about this being a retracement straight away, but doesn't look like it, does it? We'll take that. Very nice. Morning, everybody else. John, Roger, AZ, have you got a file with your backtest results of mean reversion 75.25? No, you can make one, no. Just run the test. A yen trade, I know. Yeah, I know. But it's a yen trade. The reason I didn't take a yen trade yesterday was although it was a good 150, 175, 200 ADR day on all the yen pairs yesterday, it was lit up like a Christmas tree. I wanted to wait and see what moves came in this morning at the open in Japan. And I wanted to, most of these yens, when we went through them all yesterday, because they're all ADRs, I pointed out, yeah, they look lovely, big extensions, but I would rather them be at an area of support resistance. So I woke up this morning and I saw a bounce at support resistance. That's why I took the trade. Confluence, not just because it was extended yesterday. So I wanted to see some signs of buyers coming in this morning. And if you look at all the yen pairs, this one I said, yeah, lovely extension, would much rather it was down here, which would be ADR today. That would be a good one. But obviously CAD has got the interest rates today. The Swiss, that one wasn't very good yesterday. There wasn't any good levels. Euro, again, nice levels. 3 weekly lows all in a row. This zone here, previous propulsion move, perfect. I've already got 2 exposures long on the euro, so couldn't take that myself. Didn't want to take it myself. Pound yen hasn't really got to any decent support. It's just pulled back inside the range. New Zealand yen didn't get to where it needed to be, and the US dollar yen not taking this ahead of FOMC. So Aussie yen was really the only one on my radar. So that's why I took it. I'm only taking one, and it's positive swaps. So I'm happy with it. But I'm only taking one. What do you think of the DAX sell-off? I got out of shorts, thinking of a long position. Well, I've answered that question. EA has already taken me long, already profited, in the bank, done, dusted. In fact, if this gets to £1,000 this morning as a combined total, I will just shut the lot. Walk away with £1,000. Trailing stops are in place. Just got just over 1 ADR, 1 R locked in there and 1 R locked in there. So guaranteed another profit on the second half of the trade. There's no real upside targets on this today. You've got that previous monthly low. That's not a previous monthly low. That's a previous monthly high. Yeah, that's the 2-month high. So you've got this little wick here on the DAX. You've got a little low there, which is a previous resistance turned support. So really 150 ADR is your only upside resistance today. There's absolutely no reason for this to do anything other than go up. If it's going to go up today, if they are going to rally it, there's nothing really to stop it. The only thing you need to be aware of is this here, which is yesterday's low, which sits at 186.36. So which we're just approaching now. It's just shy of 4R is yesterday's low. So watch for limit order triggers there. We are already above yesterday's low on the FTSE, which is here. So you got a little propulsion move there, which you might find they add to. Other than that, you're looking at this weekly level here as upside resistance, which is again is 125 ADR. There's so much room on this, obviously, as you would expect. And again, that's another reason I've taken a yen trade, because there's so much room. You know, people used to talk to me when I was learning to trade about taking trades when there's room for the trade to work out. And it takes quite a lot of experience to identify white space, if you like, in trading. Like this low here is obvious as a low, which they bought up 3 times. Then the next day they bought it again. And then we screamed straight through it. So in my opinion, upside space is all of this today. Up to 150 ADR. There's not really any reason you would stop. There's a propulsion gap there, which may well work. But that's where the last level was that they were buying and selling from. And, you know, upside space, if you're going to put in a V-shaped recovery, is all of that. Upside space on the indices this morning is obviously anything before you get to a level which we've had some kind of price action at. Those 2 levels there, that level there. Yeah, we hit it, we sold. We hit it, we sold. We hit it, we sold. We hit it, we broke through, we bought it, we tried again, we got through it, we hit it again, bang, we came down, we hit it, we bought. Yeah, that is all upside space. There's no reason for market to stop until it gets there. So that's where you target. Morning. Morning, noob. Ismet. Just bought the market reversal alert indicator. Hope to get some nice results in combination with the position trade EA. Yep, you can use the MRA EA with the position trade EA. It's not a problem. So you would obviously just wait for a reverse alert, then hit the button. One thing that's good to use, a good way to use the reversal alerts indicator with the position trader EA is here. So once you get a reversal alert, yeah, and you've got confirmation, obviously, of market structure potentially shifting. So you've got buyers on side. Wait for the pullback, yeah, and as the pullback happens, hit the buy stop button, yeah, and if the market continues to scream down and invalidates that reversal alert, you're just going to trail an order. You're not getting in. And then once it's got down below that level, it's invalidated. So close that pending order off. Yeah. Wait for the next reversal alert. So it's good for taking a second leg entry. Yeah. Which is what obviously the market reversal alerts EA would do. You can set it to only trade retests. But that's a good way to use the position trader EA with it. So often, you know, it varies, but a good reversal alert, what we're looking for is an M pattern. Yeah, so we're looking for the market to be pushing in one direction, sellers to take control, buyers to attempt a second leg and fail, and the sellers to overwhelm them. That's what causes the M pattern to happen. And that's either going to be that type of movement or that type of movement, or it's a double top. Yeah, the reversal retest. Yeah, that's the strongest signal because it's confirming the sellers have taken control and they're holding control of the market, which means usually the buyers will give up and they will flip short, which is why we get the downward movement after the reversal. Yeah. So using the pending buy stop and sell stops to only get in when that second leg gets underway gets you a much better price. That is if you're using a stop loss. If you're not using a stop loss, it doesn't really matter, does it? If you're position trading, it's irrelevant. Yeah. So there's a good example. That Yeah, so the sellers tried again to break that low, the buyers bought it. Sellers tried again to break that low, buyers bought it. Sellers tried again, buyers bought it. That's where they took control. They came back, tried again to break that level. Buyers took back control at the same place they bought it from last time. Propulsion gap, retest, off we go. So you would set a pending order after you get the reversal alert and you've pushed back down. So you'd be trading a pending long there, then it would move it down to there, then it would move it down to there, then it would move it down to there, and that's where you would trigger your entry with the buy stop. Or you can just hit the button. Doesn't matter. Whatever you want. I don't care. DAX still going, FTSE still going. Market is mental at the moment, isn't it? Absolute craziness, which is always good. So when you take out one position, the other go break even. So when you take out one position, the others go break even. Yeah. So with the SIHEA, when it takes two orders, there. So it takes two orders on the break, or it places two orders on the break. As soon as it triggers, you have your two TPs. I can't speak. Two TP set. That was the first one today, and that was the second one. So I've got mine set to 3R and 5R. If the market pushes up and hits your first target, it will then automatically cancel off the pending sell orders, move your stop loss to break even on your second position, so that you've guaranteed one and you've locked in no loss and a free trade on the second entry. So if you manually close out one position, it goes, oh, you've only got one on. When I've got one on, I need to cancel all this off and move to break even. Yeah. You've also got the trailing stop mechanism in it as well. So I have my trailers set to 2R. So what happens with my particular setup is when it breaks, if it breaks to 2R, it will automatically start trailing both positions anyway. Even if I haven't hit my target, wherever it may be, it will start to trail. So if you get a 2R break at the open, i.e. one candle or the first 10 minutes breaks to 2 times the normal range, then it would automatically protect the positions for you anyway, which isn't always the best thing to do, because what you often get is a big break to 2R, then a retracement, and then a rally. And obviously what happens is you get taken out with your trailing stops before you get to your targets. But for me, this strategy is all about momentum. If you get momentum like this at the open, you're stupid not to take it, in my opinion. And it doesn't matter where it gets to. If it gets to 1.5R, 1.7R, 2.5R, 3R, whatever it is, if you get a massive buy like that, there are so many times you see a massive buy come into the market, which is the initial, what's what they call the initial cash balance. So it's the initial batch of orders that the market has to place at the opening bell. So it all goes in at once and you go bang, you get this massive move. That has nothing to do with directional bias a lot of the time on the day. So you get this big cash balance go in and then they go, right, we've done all the orders. What should we do now? Well, I want to sell it today. And all of a sudden it will retrace the entire thing and go back the other way. Take that money if you see it. If it's just shy of your target, my target's there. Yeah, that's where I got in. Take it. If it goes down, you've lost it. Yeah. If it goes up, it goes up. You've still got a second position on which you're going to trail, which is going to make you the money. That's the whole purpose of the strategy. It's a momentum breakout strategy. That is a momentum breakout. It's done its job. Take it. Yes, you could get 5R, 6R, 7R. Yeah. But you might not. No one can see the future. You don't know where this is going today. You can speculate where it's going. But, I can say until I'm blue in the face, that's where I reckon it's going today. How it gets there is the important thing. If it gets there, that's great. If it gets there in a straight line, I've won. If it gets there by doing this, yeah, I'm stopped out in the second position. Doesn't help me. Yeah, it's very rare for it to go parabolic in one direction continuously. You can see it's run out of steam. Yeah, market is starting to falter. The buyers are starting to lose traction. And we don't know if this is buyers entering new positions or whether it's sellers exiting positions from yesterday. If it's sellers exiting positions from yesterday, getting ready to scale into the next batch of sell orders, this thing's going to go down an ADR, isn't it? So, you don't know where price is going. Nobody knows where price is going because nobody knows what orders are in there. Even if you've got a volume profile and it's showing you where the orders have been and it's showing you the ladder and it shows you how many orders are sitting at each level, you don't know whether those orders are intention for long or intention for short, which is why, you know, these all these software packages for futures that give you the order book, they're not any more use. It's showing you where there's a big batch of orders, but it doesn't tell you the direction of the orders. So you get there and you've got a 50-50 chance of that batch of orders propelling further or retracing the move. Doesn't help you in any way, does it? Which is why you see me get out in propulsion gaps all the time, because I know there's going to be orders sitting there that are likely to be sell orders, because that's the type of order they were there and they're likely to add to those orders. But I have no idea of the volume of buyers we've got when we get to those sell orders. If the sell orders sitting here are 50k and there's 100k's worth of buy volume arriving at that level, it's going through it. So you can look for clues. Yeah, there's big clues in the market. This thing's going to retrace, so I'm going to close it. It might be right, might be wrong. But for me, there's £800 there. I'm taking it in case I'm right. Yeah, look at those wicks. And that is also a session high, or pre-market session high. Not that we have really a pre-market in the DAX. We do, but so yeah, anyway. Right, so let's have a look at where we are today. So far, no ADRs. Wouldn't expect there to be. The news today, we had the Australian GDP today, which came out as expected. So there was no shocks on the Aussies. We've got a big downward movement on that, but not really gone anywhere. So as you can see, nothing's hit ADR basically. So we had some reaction, which you will always get on a GDP number or any major news, but market not really directional based off of it, because obviously there's no shock factor there because it's as expected. So the main news today is 245, which is the Bank of Canada rate. We're dropping down to 4.25. That's the forecast. There's not really any reason we shouldn't be, but you never know. So if that comes out as a negative, likely market reaction will be weakness. However, that will be factored in already. And also the initial reaction is not what we're interested in. It's the forward guidance. So the Bank of Canada will give us an indication of whether or not the next interest rate rally is expected to be, the next interest rate change is expected to be bullish or bearish, i.e. changing it up or down or staying the same. And more importantly, what their forecasts and expectations are for CPI and unemployment. So the inflation and unemployment is what drives the interest rate. So we're interested in what do you think about inflation and unemployment rates, because that is going to give us an idea what that will be, and that will tell us the direction price is likely to go long term. So that's where we'll be ears pricked. So about 4 o'clock, usually around about half an hour after, that's when you see the move start, if there is going to be a move. If we get the 4.25 as forecast and that's all factored in, we'll get a knee-jerk reaction. If the press conference doesn't confirm anything bullish or bearish, we'll probably just do nothing. So it's all about reading what intention is there. As we're not economists, we can't do that. So we wait for the market to decide. And the market will take off in one direction or the other. And that should give you an indication of which way we're likely to go. So we'll watch all that this afternoon. We'll have a look at it tomorrow. And see what the fallout of that is. Overnight wise, there's not much news. So that's the manufacturing PMIs yesterday. So as you can see overnight, Nvidia has been subpoenaed, something, which might indicate what that sell-off was for yesterday. There's your GDP figure for the Aussie. And not a lot of else of news. Nothing more on the Middle East. And there's nothing in the news this morning to really indicate what all of this Swiss franc and yen strength was for yesterday. So I think it's probably just, obviously it was Tuesday yesterday. Monday was a bank holiday in the US. It was Labor Day. So obviously we had low volume of orders on Monday. So I suspect it was just the market waking up on Tuesday, although it is weird that it was the Swiss franc and the yen that got all the strength, which typically indicates some kind of safe haven run. So Those moved obviously big yesterday, but when you look at it, it's not unusual to have a big day, is it? Yeah, we have big days all the time, and after big days it tends to retrace the day, which is what mean reversion is all about. So there's an opportunity today. If these do continue and we have another big strong day, you're going to be 2 ADR in a row, which is obviously indicative of something going on, but it gives you more opportunities to mean revert it. So all these yens are still pushing down at the moment. Aussie yen, I decided just to hit the button this morning, but that was only because we're at a decent level. So if that level breaks, we're coming down into propulsion. Once we're down in propulsion, if that doesn't hold, it's confirming that basically we're starting a new leg. And if that is the case, we're coming down there. But we're unlikely to get there like that. We're more likely to get there a little bit more orderly. But yeah, so long on that one. So there's no other ADRs. Weekly range, nothing's hit weekly ranges yet. So although we had those big ADR days yesterday, which was 175s, 200s on some pairs, we still fell short of the weekly ranges. As you can see, Aussie dollar yen was one of the bigger movers yesterday. That's done 284 out of 328. So it's not quite at its weekly range, but today it could hit its weekly range. Anything that hits weekly range on a Wednesday is not a bad mean reversion opportunity. That's where the midweek reversal kind of theory comes from. If you're pushing strong in one direction for the first half of the week, likelihood is the market will want to unwind a position of it before the end of the week to take the profit to put it in the bank. So nothing's hit its monthlies yet either. RSIs, we've got quite a few on the 4 hour. So Aussie US is extended on the 4 hour to the downside. Not massive extension, but it is extended. We've got pound odd, again extended to the upside. That looks like a false breakout. So market trying really hard to rally, but struggling. So market structure's odd. It's basically a range, isn't it? So I said yesterday, if this breaks out and it does continue, i.e. it comes back and retests this area and then goes long, we're coming all the way up into there, which is 2 ADR. This isn't a great propulsion gap because it's just part of the A-shaped recovery from that weird 200 ADR move we had in 2 hours on that Monday at the beginning of August. So this is just a quick undoing rather than a propulsion move. So whether or not there's still anybody there and their target, that difficult to tell. But that is extended to the upside again. So potential is that we're just going to have the similar sort of thing. So you get a false breakout and then a retracement. That's a double top retracement. This is potentially a false breakout retracement. So don't get greedy. Look for half the range. Look for somewhere in the propulsion move to the downside. But that is a 4 hour extension. You can see where you're likely to head. So just this move here is just nonsensical. That was just a weird slippage thing that happened. There was no reason for it. 200 ADR move, but literally just went nuts, didn't it? So realistically, that's the end of the move here. So if you look at that retracement based on that leg, we're roughly 50% retracement on the leg. So potentially it's going to do that. However, fundamentals are the opposite direction. Yeah. So Australian dollar not dropping interest rates. Pound, we're expecting to drop interest rates shortly. So bias fundamentally should be a short. If you go out a little bit further, you can see that we're not really going anywhere at the moment. Yeah. So we are range bound at present. There's multiple ranges at play. But we're not trending anywhere at the moment. So where we are at the minute is very difficult to trade from because you're bang in the middle of a range and it can decide to go in either direction. But fundamentally, it's more of that than the other. And we've got New Zealand US. So got out of that one, as I said, today. Last of that out yesterday. So that is an extension to the downside. So likely a push back up. So all the head and shoulders guys will be going nuts at the moment, waiting for the entry there. Not a bad entry short, which would just be obviously market structure short. Again, this is what we're interested in the US. So we've got non-farm payroll this week. Today should have been ADP unemployment change and unemployment claims, but obviously because we had the bank holiday on Monday, it's moved from Wednesday to Thursday. So we've now got more news for the US tomorrow than we would normally have. So we've got a 1:15, a 1:30, and a 3 o'clock release. So it's going to be a busy old day tomorrow. And then obviously non-farm and unemployment rate on Friday. So we've got Wallace scheduled in to speak as well at 4. So tomorrow and Friday are going to be very, very busy for the US. So anything you get into US-wise today, you're not likely to get far because they're going to be waiting for news tomorrow and Friday to actually get some movement into the US. So those are your extensions at the moment. So nothing particularly exciting. Just see what's going on with these indices. So that was the right decision. So bearish price action coming in after that big rally. However, that's a big old propulsion move. So likely, if we're going to continue, that's where you're going to buy it from. Not quite there yet on the DAX, but on the FTSE, certainly, we started to hit that zone where you'd find them. If they're going to continue this move today, this is where they're going to do it from, because they won't let their initial positions go into loss. They'll just add to them. So if it's going to go long, like I said, though, you know, when you get these big moves, it is either an exhaustion move and it collapses the other way, or it's a strength move and it goes that way. That's the thing you can never know. This is why trading is so frustrating, because any move in any direction can mean one of two things: continuation or reversal. You never know. There is no way to tell. Doesn't matter how many courses you do, how many books you read, nothing is going to tell you what's going to happen in the future. So you have to make a decision. Right, so I'm going to run through all the pairs today, and we'll look at everything, see where we're going, and I need to get some exposure on. Ideally, not on the euro. So I'm looking for, I haven't got any US on at the moment. Not sure I want any Swiss at the moment, but we'll look at the Swissies as well. We know they're all extended. Morning, Shyam. I like the way you've asked how everybody is, and everybody's completely ignored you. I'm fine, thanks. How are you? Right, Aussies. So Aussie CAD, difficult at the moment. Obviously, the bias is long. Anything Canadian dollar today, it's whatever's going to happen with the interest rates. So interest rates are, it's an odd time, isn't it? 245, which is very annoying. So if you're trading US indices today, just be aware that the open is likely not to do an awful lot. You might get some movement off that Nvidia news, but they're not going to really want to do a massive move ahead of the Canadian interest rate announcement. So yeah, 245, 15 minutes after market open. So anything you trade in CAD is going to be affected this afternoon. It's either going to be one of those, or we're going to get a takeoff in one direction or the other. So we'll wait and see what happens. But the forecast is for the Canadians to drop interest rates. In theory, that would be bullish Aussie CAD, because obviously the Canadian dollar will tend to weaken on it. Whether or not that weakness is recovered, because we've already factored that in, we'll have to wait and see. So at the moment, you can see Aussie's been running against the CAD. It's been running against the US. So the US and the CAD have been dropping, although they are starting to mean revert now. So nice propulsion gap bounce underway, but anything you take on this today is obviously going to be determined by this afternoon's movement. So not really a lot you can do with that today. There is an argument for taking some kind of hedge-based trade on the CAD if you wanted to. So you could take a Euro CAD and a Pound CAD trade. That way it doesn't matter which way it goes. Trade one in one direction, one in the other, and hope that one of them moves a little bit stronger than the other one and get profit out of it. But other than that, there's not a lot you can do with the CAD. It should continue to weaken. And when the US dollar drops its interest rate on the 18th of September, we are going to see further weakness in the Canadian dollar as well. So really, you want to be looking for buys. We've had a reversal alert on it this morning, so market is starting to... What the hell is going on with my indicator today? Weird. Excuse me. So had a reversal alert, although it's a bit of an odd one. So yeah, but buyers are starting to trickle in this morning. So not particularly convincingly though, is it? Trouble with this one obviously is we've had the Australian news. So but yeah, not a lot you can really do with that today. Aussie dollar Swiss is a good mean reversion opportunity for longs. So we had that big strong move today. We've moved down on the Aussie today as well. Bear in mind this is a negative move on neutral news, so it's not really a move. You'd expect that whole thing to be undone today. You've got a good propulsion gap coming up down here on the Aussie Swiss as well. RSI is also extended to the downside on the hourly. But, you know, all the Swiss franc pairs are a bit of a mystery at the moment. So they're obviously tracking what the yen does, and the yen's had an intervention. So is the yen going to power up, or is the yen going to weaken? That really is your answer to what the Swiss franc's going to do, unless Jordan decides to manipulate it in one way or the other based on whenever they fancy it. So very difficult at the moment. The Swiss... we haven't got any news coming up on the Swiss this month, I don't think. There we are. That is this month. It's the 28th. So that's your next interest rate change for the Swiss right at the end of the month. So usually 2 to 3 weeks before an interest rate change, you start to see the market generally trying to move in the direction it's expecting it to go. And because the Swiss CPI came out neutral, there's no bias long or short for interest rates. So difficult to call. So right now, if you want to take an RSI long, back up into there, not a bad idea. 4 hour is also nicely extended in this propulsion gap. But it's very, very much of a lottery which way this one's going to go, isn't it? So all these propulsion gaps to the upside that you see here on the yen pairs and the Swiss pairs are all caused by the yen intervention. There is no reason for the market to come back up into this area. So we'll see what happens. Aussie dollar yen, as I said, just taken first long on that one today. So this is a false breakout of those highs. Nice big strong move down. So I'm looking for some kind of retracement up into that area, even if it's going to continue to the downside. And it's long. I don't mind being long because it's positive swaps. So yeah, so just taking first long on that. That's an H4 RSI extension and an hourly RSI extension, and coming off the back of a 200 ADR day to the downside. So just lots of confluence, lots of levels, weekly levels here that we're tapping into where we're likely to find buyers. I've seen the buyers come in this morning. Whether they're still there in the next hour or so, we'll wait and see. So first entry taken long on that. Aussie New Zealand bias on this one is a long. Fundamentally, although you can't really tell, can you, by the market structure, it's actually still short. So looking for a pullback up into here. Fundamentally, that is what we should be seeing from price based on interest rates. We have had the reversal last week, and it is holding, and we are potentially now putting in a higher low. So if you look at market structure, we got the low there after the news, which was last month's low. We pushed up, we reversed, we pulled back, we pushed up, made a new high, made a new low in the propulsion gap, added to it, made a new high. Now we're putting in a new low here. So it's a higher low. We'll be looking for a higher high to be put in. Even if it's just a retracement to the downside, you should be able to get up into there, shouldn't you? So looks good for longs at the moment. Not quite extended on the RSI. On either time frame, so it's not an RSI entry. It would be kind of more of a market structure entry if you wanted to take it. But that is certainly the bias. I'm not trading Aussie New Zealand at the moment. Aussie US got out of this one this week. Yesterday took the second half of that off. So yeah, waiting for the US dollar. see what happens with that over the next couple of days. But we double topped last month on the previous month's high. So we hit the brick wall, tried to get through it, failed. Yeah. So it is retracing from there. So we've got US dollar strength coming in at the moment, which is more than likely undoing a percentage of the weakness ahead of the news we've got coming up on unemployment rate this week. And that unemployment rate this week is going to tell us whether or not we're going 1/4% or 0.5%. It's not a case of are we changing interest rates, it's a change of how much. It's a great case of how much. So this week, we should get an indication as to whether we're going to be really bullish or bearish. However, I don't think the US is going to come screaming down ridiculously fast. I think it's going to be more of a neutral to weak sort of structure on the way down. So it could go long. Obviously, the bias on it is going to be long. They're reducing interest rates. They're not. So potentially you could go long, but I'd much rather wait for it to get a little bit further down. But then the trouble is, any trades you're taking up until the 18th of September, it's going to be very hard to get out of them quickly if it goes against you. And I don't know really whether they're going to power up or to really weaken that US dollar. So kind of waiting for an A+++ setup on this. If this was to carry on down and hit ADR today, and we get like really extended below that 20 level on the 4-hour RSI, I would get in. But at the moment, it's difficult. You kind of want to be short because of the double top bounce, but you kind of want to be long because of the fundamental bias. So it's a little bit of a tricky one to read at the minute. Clear air, again, I was talking about clear air this morning. Breaking that low, there's nothing here that would indicate that you can stop it. So you should be looking to get down to 150 ADR if it breaks to the downside. If it doesn't break to the downside, it's going to go back up again, isn't it? So don't know on that one at the moment. It is a 4-hour RSI long, and if you do take that target wise, it's quite a target rich environment, isn't it? Depending where you get in, obviously, that would be the area that I'd be interested in, somewhere here. So 125 ADR to the upside is your safest target in case they use that to push back down again. But you can see they got completely overwhelmed yesterday. So this propulsion gap that we had, which was Powell announcing interest rate drops, as soon as they did that, obviously we had the weakness come into the US, and it's held constantly until yesterday, and it just screamed straight through it yesterday. So nothing really exciting on that one. I would be more interested in longing than shorting at the moment on it. CAD Swiss, same thing for the CAD. Anything CAD at the moment today. That's going to happen today, possibly. So don't know. I'd be interested in a long sort of down at the previous week's low. This accumulation break, which they retested twice. We are holding longs, as you can see. Market is struggling to go short. Yeah. So down here would be a good sort of catapult long. But again, Swiss franc, I'm so wary about trading the Swiss franc at the moment. Now Jordan has said that they're going to manipulate it in the same way as they manipulate the yen. You can get any kind of reaction on this at any time. So fundamentally, the Swiss is kind of its own loose cannon, the same as the yen is. So from a fundamental perspective on the CAD, it's that. But you're going to need the Swiss franc also to be strong at the same time. And as we had a massive strong rally on the Swissy yesterday, may well go into a bit of weakness today. So it's very difficult to call anything at the minute. We're in this weird aftermath of the interest rate freeze where everybody's now starting to drop interest rates and all the currencies are starting to weaken at the same time, which means they're all weak, which means they can't all go down at the same time. Someone's got to be stronger than the other one. So it's hard to call directional bias. As you can see, the market's struggling as well. So not really any reason for this to go either way. So I'd be more inclined to wait for an RSI extension either on 4 hour or on the hourly. CAD yen, again, sideways, all of these yens. I'm really not interested in trading much yen. I'll take one. I've taken the Aussie yen this morning, but all the rest of the yens, you know, we've been sitting sideways for a month. There's absolutely no way to read this. If you want to assume it's going to stay range bound, ADR long, RSI long. Other than that, you just got to sit and wait for something interesting to happen at some point. We're slightly more bullish on the Swiss against the yen. So again, no RSI extensions to the downside on this one, but you can see they're buying up last week's level there at the moment. Yeah, so this propulsion move from last week, which they've bought 1, 2, 3 and a half, 4, 5, 6, 7 times now. They're long from there. Yeah, we've made a high, we've pulled back into it. We've made a higher high, we've pulled back into it. We're not getting through it. So good looking long opportunity there on the Swiss yen. So yeah, if that doesn't pan out, you're looking to get into second position down here, third position down there. So first entry is there if you want to take it. M5 reverse alert's already gone in just 10 minutes ago. So half an ADR is 73. So next support is 150.08, 146 is ADR. So your second entry would be somewhere around here, and your third entry somewhere around there. You might be in 4 by the time it gets down to this weekly low, which is 2 weeks ago. But it's got to get through all of that to get to this, and there's a lot of buyers in all these levels. So it's a good looking long, and you've got support long. So either is going to go for a new high, in which case you'll be out of this in 2 to 3 days, or you know, this reversal alert could hold. It could be a false breakout, in which case then if you do go long and it pushes up, you're going to find a lower high going in somewhere up here before it comes back down. So good looking long either way. There's no RSI extension on it though, so the relative strength, as you can see, is not there, but technically not bad. Morning, Mr. Lunary. Shyam, thanks for responding. I am well. I have open positions on Nikkei and Hedges. I was waiting to hit 40k, but it's pushing down. I don't trade the Nikkei, so I can't help you with that one. US 30 this afternoon. Market shut this morning, so you're only trading Globex. If you're trading US indices or anything relating to US indices this morning, you are literally just trading Globex. And Globex is typically rangy, but yeah, everything's rallying, trying to rally. Look, so Globex session in the US is the same equivalent to the Asian session in Forex. Yeah, so you can see that's your Globex session when the markets are shut, opening bell. So you don't trade the US indices in the morning. The Nikkei I don't know anything about, so I can't help you there. But market's certainly rallying long. There's a big buy coming in, so I suspect this is more likely a profit take move ahead of the Canadian rates. So they're just trying to get some of that yesterday's move leveled out. So I would suspect it's probably going to continue today. So there's your propulsion gap holding on the FTSE. Didn't even get back there. This second move held on the DAX. This is yesterday's high, yesterday's low right now on the DAX. We are at yesterday's low, trying to get through that level. We're struggling to get through yesterday's low on the FTSE as well. Look. So that is yesterday's low. So we pushed through it. They sold it back off. We're there now. That propulsion gap is yesterday's low. So that could be a sticking point for both of them. But 4 hour on the DAX and just shy of 4 hour on the FTSE this morning. Morning, Neo. Right, euros. So euro at the moment, I've got longs on a couple of positions. The euro bias is short, Aussie dollar is long. So that move obviously is the opposite to fundamentals again at the moment, which is likely just to pull back on that leg. So last entry I had was here on that extension out in the propulsion. So yeah, at the moment you're extended on the hourly and you've just got extended on the 4 hourly. So market structure on this, forgetting this ridiculous move here. It did break out on the Friday before we got that ridiculous 200 ADR move on the Monday, which it just undid because it wasn't real. So market structure really, if you look at it from where we were on Friday, which is there, is short. Yeah. So that is the expected direction for the euro odd. We haven't got to that high yet. So this is potentially where we're putting our lower high in and moving down from. Nice extension to the upside. So it's a good looking short opportunity. At the moment, I've got 2 longs on. So I'm not going to take that myself. But if you haven't got any exposure on the euro, that's a good looking short at the minute. Hourly RSI extension, 4 hourly RSI extension. We got an ADR hit on this yesterday as well. So ADR is 97. We did 174. So big 175 ADR extension yesterday. And we've had this move today caused by the Australian dollar. So we've almost hit ADR on that one today. And we're batting up into this double weekly level as well, which it's completely stalled at. So potential for that to come down into there. But it may well continue to rally. So we'll just wait and see. But good looking short opportunity there. Euro CAD, again, same with all the CADs. Nothing much you can do with it today. If you do get into anything on the Canadian dollar today, you're flipping a coin whether the CAD goes long or short. So nothing wrong with that. Just make sure you deal with the trade if it goes in the wrong direction. So expected direction would be that because we're dropping interest rates or forecast to drop interest rates. So if that interest rate drop happens, we should see weakness in the Canadian dollar. So that would be a good level to start shorting it from if it gets there, which is 175 ADR. So it's going to have to really go some to get there. But that's a decent level. So we had that low, which we hit multiple times, and then we slammed through it. We haven't tested it yet. Little test there, but we haven't retested that level yet. So I'd expect to find sellers there. Looking for the market structure to continue short. Euro Swiss, sideways. No, just meh. No idea. Can't really do much with this Swiss. I mean, it's at the moment it's kind of contracting. If it pushes up into this propulsion gap, you're kind of contracting into a symmetrical triangle pattern, which in theory should break short, obviously because we're bearish, but very difficult to call this one. More likely weak euro, but the Swiss will weaken with the euro as well, which is why you normally get a range-bound movement on this. But as you can see, the Swiss really has come alive since the yen intervention move. So RSI extensions to the upside or downside if you want to trade the Swiss, but it can be squeezy. So just be careful with it. Euro pound, I've got longs on at the moment, still in, and I'm stuck. Can't get anywhere with this because it's just stuck. So 1, 2, 3, 4, 5, day 6 sideways. It is a rounding bottom though, so it's rounding bottom pattern. So we are starting to become bullish, but there's no euro pound news this week. We've got construction PMIs for the pound tomorrow, but that's it. There's no euro or pound news this week to move this. So it's stuck sideways. So next pound is claimant count next week. Then we got GDP. Then we've got the euro rates next week. So next week it'll liven up a bit, but can't really do anything with it at the moment. So I'm looking basically for a pullback on this down leg. So we got beautiful support down here. That's previous month's low. That's last month's low. So there will be buying support at last month's low. And there will be buying support at the previous month's low and this whole area down here which we've been buying from. So there's a high probability I think this 4-hour reversal is going to hold. They're going to need to undo some of this move. So that kind of undid. That we got a 38 retracement on it. That we haven't done any profit take whatsoever for 2 weeks. So we're 2 weeks solid down. We're looking for them to take profit on a percentage of that move before they start their next leg. Whether their next leg be up or down, they'll want to get out of that before the euro rates come out next week. So I'm hoping we're just going to get a continuation, but it's just so unbelievably slow at the minute. Can't really do anything with it. So long, I'm probably, if ADR basically is above my break-even point. So if we get an ADR hit and we start getting up into this area here, I think what I'm going to do is just going to close that out. I'm going to take 50% off of all of it and just sit in the rest and see what happens. So just going to reduce the size right down on it because it's just stuck and stalled out. So that'll be a nice little profit, but I'll use that profit just to reduce the exposure on it because it's not really going anywhere. The bias on it is very difficult to call. We're both dropping interest rates. The euro is going to go first, but Bailey's expected to follow. So there's not really a long or a short bias on it. As you can see, that's why we've got a tiny ADR of 32 and why we spend the 90% of our time just going sideways. This parabolic nuttiness that we got from the euro was weird. It just happened. But obviously, it wasn't a move, which is why the market's undone it because there was no reason for it. It was just, it's almost like you look at these sorts of moves. Just happens to start when summer trading kicks in, end of July, and for the whole of August, it was slippy. It's just slippy. Not much liquidity, and it seems to be maybe large orders caused it. That 200% ADR move we had at the end of it in 2 hours never happened before. So it's just one of those weird slippy months, which they've had to correct. But yeah, don't know where it's going long term. There's no real advantage to be directionally biased on this pair. Very, very close trade partners. It's in our interest to keep our currencies stable. When one of them does have an interest rate differential, usually you will get the other one reacting to that to keep it stable. So, that is the expected move. How far we get before the news kicks in a week or so, we'll have to wait and see. Week or so, it's next week, isn't it? Yeah. So next Thursday is the euro rate. We've got a few pound announcements before that. So hopefully we get a little bit of a bearish move on the pound just for a little bit to take us up there. And then obviously we'll see what happens. But I'm long on that and have been long on it for roughly a week and a half, 2 weeks. Just stuck. Euro yen, again, all the yen pairs, your guess is as good as mine. Just impossible to read. Flip a coin. Right now, it's a lovely buy. So we got last week's low, previous week's low, the week before's low, a low in the week before out of a propulsion move. Yeah, so they're buying this area here. So yeah, nice looking long up into there. We are making kind of lower highs as well, but we're also making slightly higher lows. So it's kind of funneling into no idea-ness, isn't it? So right now, if you want to trade it, it's like I said for the last couple of weeks, nothing wrong with trading the yen, just use a stop. I'm happy to position trade the yen with one position and the Aussie because there is a bias there. But other than that, this is the type of thing we're getting now. You've got a 15-minute reverse alert just kicked in, or just about to kick in. You've had a 5, I think. No, not quite. So you got a 5-minute reverse alert, not yet happened either. So we're just taking that low out. There was a reversal alert there this morning during the Asian session. But when you get that reversal alert, stick stop under the low or use 15-minute if you want to be a bit more cautious. Under that low is covering last week's low as well. So if this is the limit orders triggering at last week's low and they're buying last week's low, you're totally safe there. And hold it for 2-3 days. But wait for some proper strength to come in. Wait for, the buyers are having a crack buying the lows. They've added, but there's still a lot of sellers in the market. If that breaks to the upside out that symmetrical triangle, you're going to get a reversal alert. That's your signal. Expect a retracement. Or like we said earlier, once you get the reversal alert, wait for a retracement, hit the buy stop button, and wait for the market to take you with it. Easy, but don't know which way it's going. Euro New Zealand, I've got longs on at the moment. I had an opportunity to get out of this morning at break even, but obviously that position there was my exit in propulsion. So this is the second half of the position. So I don't really need to make much money on this second half because all the money's been made on the first half. So that's where I'm targeting. We hit that level. We tested it. We broke it with a propulsion move. We retested the propulsion. They added sells. So we know the sellers sitting there. So I'm getting out just before the sellers. Got to get there first, though. So we got potential targets to the downside. So danger with this one, obviously, danger with all mean reversion is we are always fighting the trend with mean reversion. But the market spends 80% of its time in mean reversion. So that's our edge, isn't it? 80%. So basically, we're looking to see how far this can go. If you stick a fib on this, we're at the moment sitting at well, it's not even quite, I thought it was 38. We haven't quite got to 38. So there's your 38 retracement, which is a shallow pullback typically. There's your medium and deep pullback. So easily achievable that. We just need it to happen today. Would be nice. Get an ADR on that today so I can get out the rest of that position. But yeah, stuck at the moment, just grinding up. Hopefully we'll get that move. But obviously we're extended on the hourly to the upside now. And we've got bearish divergence as well. So we know there's a fair bit of bear activity. We just need that one final push. Well, I need that one final push through. But equally, this could just go all the way out of this propulsion move. Yeah, so this accumulation here. Yeah, we tried to go long. We did break it. We sat here and accumulated for a week before the news of the interest rates not changing on the New Zealand dollar sent the New Zealand dollar into a spiral. So we're just coming back and retesting that level. However, since then, the New Zealand dollar interest rates have changed to the downside and the euro is dropping as well. So the bias on this is neutral. So you should see a lot more of that type of price action in theory. But long on at the moment, it's extended to the upside. So this is the sort of area you want to start looking if it is going to continue the move for shorts. And obviously, if that's the case, then I shall be re-adding on the way down to test last month's low. Euro US got out of that one last week. Obviously, 18th of September is when we're changing interest rates. So where we're going to go when we change them is very difficult to call at the moment. We know that the US dollar's been weakening. They're going to want to undo some of that. How much we have to wait and see. So plenty of news this week. We've got unemployment claims. We've got all the non-farm payroll. We've got unemployment rate this week. We've had PMI. So yeah, plenty of opportunity for this to go in one direction or the other. Right now, it looks a decent long based on weakness. If the US dollar does drop by 0.5%, you can be pretty sure that's going to do that. However, if they drop by 0.25%, it might not do that. So we'll have to wait and see. The market, don't forget, this is the first interest rate change we've had for over 12 months coming up on the 18th of September. Yeah, so the last rate change was July 2022. All the way back here. Yeah, and since then, we've been stable at 5.5. So this is the first interest rate drop in over 12 months. How the market's going to react to it and what they are going to switch to as a long-term bias, very, very, very difficult to call. The Fed change their mind every 5 minutes. So we're on the cusp of either doing that or doing that long-term, potentially. it may not do anything. Yeah, we don't know. We just got to wait and see. But fundamentally, in a normal world, when they drop interest rates and plan a continued drop, which they are, you see weakness in the currency. But with world events at the moment, it's very hard. So at the moment, as you can see, we've had that weakness in the US. And in theory, it should continue. So much more interested in longs than shorts. However, obviously, as you can see, you should, in a normal market structure condition, be able to trade it in either direction. As long as it goes up and down, it's been reverting. As long as it's been reverting, there's an opportunity to make money. So pounds, we are stuck on the pound odd. The pound, basically, we are really stuck with. So the pound is changing its rates on the 19th, the day after the euro, and the day before the yen. So that week, next week, is just nuts. It's CPIs and interest rates all week. Yeah, so we got the CPI figure for the pound coming out the day before they changed the rates. We've got FOMC, got the US changing their rates. Sorry, it's the euros the week before, changing their rates. Then we've got the CPI figures for the US. So, kicking off next week, basically, it just goes CPI interest rate, GDP, CPI interest rate. It's just going to be nuts. We've got 2 weeks of crazy time coming. Then we go into the PMIs. So, yeah, just one of those months. But so at the moment we're stuck. Bailey hasn't given us any indication whatsoever as to what he's doing with interest rates. The consensus is dropping again, but last time it was, we think we might have to pause for a month. So it's very hard to call. Got to be a long bias on it based on Australian dollar strength. Sorry, got to be a short bias on it based on Australian dollar strength. Wrong way completely. We've just tried to get out that high, so it looks like a good looking little short there. So I kind of like the look of this one. It's a 1 hour extension. It's also a 4 hour extension. If it fails though, you're coming up about 250 ADR potentially. May not get that high, but as I said, that propulsion gap, not real because it's part of that weird A-shaped recovery move off that weird day that we had. So pound gained strength yesterday, a little bit against the Aussie, but looks more like a short. So drop down M15. You're about to get a reverse alert on that one today. M5, you've already had one, but it's just reversed back up again. So, which means it's going sideways. So yeah, looks good for shorts. Pound CAD, don't do anything with that today unless you fancy a gamble, which is fine. Just be aware you could be in that type of movement for next 2 to 3 weeks. If the Canadians drop interest rates and then say, holy cow, it's going down way faster than we thought, we're going to have to drop them again 100%. We might even go 0.5%. Yeah, this thing is going to disappear off up there. If they come out and say, actually, we're not going to bother going to 4.25, we're going to pause this month, you'll be down here. Or vice versa. Yeah, it's all news driven, as we know. So it could go into a big rally is all I'm trying to say. So just be careful with the Canadian. No signals on it on the hourly or the 4 hourly at the moment. It's a double top short at the minute, which is what the market seems to be involved in. But this week so far, we're just kind of flip-flopping around. Pound Swiss, same as all the rest, 2 weeks worth of nothingness. No idea. We're certainly holding this low. So that propulsion move there, which broke that level, is what we are selling at the minute. So it's looking more like you want to be shorting it, but no real signal at the moment. We haven't had a signal. We had a little long there last week. You can see I took that short. This is the short that I was talking about. I said, didn't I, if you were in the live room? When we get to this level, zoom out. When we get to this level, I'll be interested in shorting it. Yeah, because it's our first retest of that propulsion move, and it's our first retest of the break after the intervention. So I took that short there, and it played out beautifully within days. Good exit because we didn't get any further, but still looks like it's going to come down and test that level. So yeah, good looking short opportunities. So wait for ADR hits to the upside, RSI extensions to the upside. But looking for shorts. Pound yen, same as all the rest. Just do whatever you want with it. Just in case it goes into a squeeze, maybe use a stop loss, but very hard to call anything on that. Pound New Zealand, sideways at the minute, so I'm not doing anything with this one. Propulsion gap test is holding. Nice extension to the upside for shorts. Market structure obviously is short. So potentially looking for short opportunities on it. You got the H1 RSI extension yesterday in there. So you would have been short that yesterday if you're taking the 70 level on an hourly. Double topped it today. That looks like that's holding at the moment. So backup levels, obviously last week's high, you got a little high there, and then the previous week's high. Even if the previous week's high is the first hour of the Monday, that is the previous week's high. That is the number that they will have on their data to say this was the high of the week. They will always sell the highs and the lows of the weeks and buy them. So you got 175 ADR with a couple of decent resistance levels potentially coming up. So you got that area there. You got that high, that high. So you got three potential areas you could use for resistance to the upside if the first one doesn't work. Pound US, out of those shorts last week, we're stuck at the moment. Market really just doesn't know what to do with this US dollar. So I don't know. At the minute, I want a really good setup. I want something above 80, below 80, below 20, or on the hourly. I want it, same. I want it really extended, or I want an ADR move which is ridiculous and not caused by news. I want some big movement basically to get me interested in this. It's going to be a flip of a coin on the 18th of September, I think. But yeah, I want to buy it, but I don't want to buy it until they've pulled back a bit more on this. I want to see more retracement on it. It's too high, I think, at the moment to buy. If you stick a fib on this, 38 retracement really is where you should be looking for your first buys to come if you're going to continue market structure long. Coincides beautifully with a monthly high. We've broken out the monthly high. They will be looking to buy the monthly high because we've broken out of it. So that is perfect, which is ADR today. So if you get an ADR hit to the downside, unlikely you get there with an RSI extension because it's going to have to come down pretty damn fast to get that. Mind you, we've got news to down the CAD, which could well rally the US. So I'll be interested here or somewhere around there. So that's kind of, at the minute, just not a lot really you can do with it. Just wait. New Zealand CAD, not really doing an awful lot. Again, Canadian dollar today, take your pick, one way or the other. We had an extension yesterday on the hourly, which was a beautiful, probably a straight in, straight out, if you took it yesterday. So we got the RSI extension to the downside. You would have had an alert in there, and you'd have had a nice little sort of half ADR move out of that. Yeah, your reversal alert would have been there. You got half an ADR out of it if you took the lower reversal, which was there. You got 3/4 of an ADR or so. But yeah, it's invalidated that one today, pushed down a little bit lower. So lovely levels coming up on this one as well. So that 3-week high came down. Yeah, got the low of last week there. So that's a 2-week high. So definite support resistance area. If we can get down into that today, be interesting. However, to get into that today, it's going to be after the Canadian dollar interest rate. So if you get into it because the Canadians have not reduced the interest rate or have said that they are going to have to freeze the interest rate, that's coming down because fundamentally the Canadian dollar is strengthening. So it could well just slam straight through that. Again, talking about clear air. Yeah, when you break that level, there's nothing but clear air all the way down. There's no reason, there's no support resistance levels here you would say they're going to buy it from. Yeah, there's propulsion gaps, but these propulsion gaps are weak in that they are not really breaking a high. Yeah, there's a small accumulation there, you could say, but that didn't even break it, that propulsion gap. That candle was the one that broke it, and there's no propulsion gap there. So, this is just nothingness. There's no reason for it to just flush through it if it wants to. New Zealand Swiss, same thing as the rest with the Swissies. Hard to read a chart like that after a move like that. You don't want to long it or short it. You just want to sit in it and go, I have no idea. Technically, it's a potential long opportunity on the drop from yesterday. So we know all the Swiss francs yesterday, ADR hits. So you got 56 on a 39 ADR there. So roughly 125, 130 odd ADR to the downside. We've had a move down today. That's the Australian dollar numbers have moved the New Zealand as well. So yeah, long up into there is all I'd be interested in at the moment. New Zealand dollar yen, same as the Aussie yen. I like the Aussie yen better because of the levels it's at. Yeah, so we got all this here where we know we've got buyers sitting around this level, and that's where we are. So that's why I've taken that. New Zealand dollar will move similarly to the Aussie dollar, but we're not at a decent kind of support. It's very hard to pick a good support resistance in there. These two propulsion gaps here are sort of around that previous low, but we slammed through that. We V-shaped recovered that. Then we came back and we tested this level multiple times. So this weekly low here, which is that propulsion move, but which is part of a V-shaped recovery. See what I mean? Nothing's really good and solid in this at ADR. That would be a long opportunity. Other than that, not really interested in it at the minute, but it's extended on the hourly. So you've got hourly RSI. I'd much rather have hourly RSI in confluence with a weekly level and a propulsion move where you've got within 250 ADR, two nice backup support levels coming to get that happening if it does that. Yeah, so not in a great spot at the moment. New Zealand US got out of that one this morning, as I said. So that was my exit on the remainder of the New Zealand US position, which is in the propulsion gap ahead of that support, which we tapped into almost to the pip sort of thing. So that was why my target was there, because of that. Yeah, we'll wait and see what happens with the Canadian dollar, which should move the US as well today. So this is a 38 retracement. So potentially from a technical perspective, this is where you would look for the market to start buying if it's going to be a shallow retracement in market structure. Other than that, you're looking somewhere down here, which is 225 ADR. So you got the RSI extension there yesterday, which is again one of the reasons I got out of that part, because we were extended. I was expecting a bit of a bounce up. We didn't get it. So this is a nice level to buy from potentially for the market. But New Zealand dollar's just removed its interest rate unexpectedly, and the US is going to be dropping its interest rate. So fundamentally, there's no bias in either direction. So again, it's another coin flip with the US dollar. Could go in either direction, but this is a really strong move up. So you would expect a good, decent retracement on it. Market needs to take profit on this. So this leg specifically from here, that was that weird move that we had at the beginning of August. So that's kind of done, 50%. This one, we just flagged and broke and flagged and broke. So there's no retracement from here. So if you want to measure with a fib from that level, which is what I just did, yeah, this is where you would look to start taking profit if you were in a short, which is why I'm out, because obviously all my shorts, I'm thinking there could be a potential bounce here. So time to get out of shorts. If that doesn't happen, this is where you want to start longing it. So when the RSI gets extended again on the hourly, good looking on long opportunity. 4 hour, you are extended. So again, 4 hour RSI extension with a 38 retracement. But if you look at it, it's just got so much more potential profit taking yet to do. Just, look at that move there and look at what we did. It's always the same. Yeah, you're always looking at the same movements. That's my new app that is keeping track of the family. My wife's just completed a 1 mile drive. Why do I need to know that? Anyway, so that could be something bad, couldn't it? Your wife has just completed a 1 mile drive. She was trying to get to 2 miles, but she only made it to 1. Sure, you've got to know where they're going for that to make any sense. Anyway, so yeah, I would be much more interested in longs a little bit further down on this, although that is a nice 4-hour RSI. But obviously with this, this is the RSI 10. We know this can get further. So it could go down further. It could not. We'll have to wait and see what the Canadians make of it this afternoon with their interest rates. US dollar CAD got out of that one yesterday as well. So propulsion move. I had a little bit too much exposure on the US, so I've taken this off in multiple parts, but got out in the middle of the propulsion gap in case we do get continuation strength, and I wanted to be flat for the Canadian today. So I wanted to get out of that, and I did just. But that could easily be up there. 225 ADR, probably not today, but you never know. Canadians could do something really, really stupid today. So they could drop by 0.5%, in which case you will be up there this afternoon. But we'll wait and see. US dollar Swiss and US dollar yen. Again, US dollar yen, very difficult to know what's going on with the fundamentals on these two. Somewhere between 140 to 150, which is kind of here and just below where we are there, is where I can see this kind of stabilizing moving forward. So the Japanese wanted this below 150. You know, they constantly say it. This 150 level is where it becomes uneconomic for the Japanese to trade with the US. Most of their trade is with the US. They need price below 150. So I would say that is probably your upside. I'd be interested in shorting it up there if it got back up there. However, I've said that before, haven't I? And just doesn't do it. So this intervention obviously made sure of the move. The market will be scared to go above that level again because the Japanese have proven once again we can do that. So I don't really want to get involved in US dollar yen at the minute. Back down here, which is your 140 level, is where I'd be interested. So if we do break down to this sort of area, I'd be sort of interested in starting to get into some mean reversion trades and assume that we're just going to go back into normal sort of price action. You've got to go far back to actually find it. But you know, this is what used to be. If you look at the dates on this, this is 2022 before the interest rate rally started. So this is the interest rate rally commencing. We are now at the point where we're starting to drop interest rates on the US, and the Japanese for the first time in 22 decades is basically increasing its interest rates. So we're not in a normal situation, and I don't think we'll ever go back to that type of normal situation where we had nice contracted ADRs and it was easy to trade. So it's volatile as hell now. So you've just got to be very careful with it. It's not really great for position trading, I don't think, the US dollar yen anymore. Conditions are changed, and I've been caught out on it a couple of times. So it's the sort of thing I would still trade, but with caution. And you know, the new position trader EA version for drawdown control, I've added this drawdown control based on number of open trades in there. A few people have asked for it in the past. I've done loads of testing on this in the past, and it wasn't as effective as scaling out with a percentage of drawdown. I can see the argument for using this with some instruments now, though. More from a emergency cut it type thing. If you get 6 in, it's probably at the point where you've got to start taking big losses on it, or bigger losses than normal, to stop those inevitable long-term squeezes. And this is one of the pairs I think that setting is probably viable for. So but I'm not trading at the minute. And same with the US dollar Swiss. The Swissy is far too volatile. It's been kind of squeeze after squeeze on this thing. You can see that movement there from where we started to drop there. If you are not getting out, if you're in this in the wrong direction and you're not getting out with tiny profits very, very quickly, it's very dangerous. You've got to be very careful with it, because the Swiss, Jordan has come out and said, we will have no problem intervening in the Swiss currency as we deem fit, by either powering the Swiss up or reducing the power in the Swiss at our discretion, meaning that at any time they can pull a trigger and collapse it dramatically. If you're the wrong way on that and they collapse it for no other reason, and it doesn't go with the fundamentals and it doesn't go with the technicals, it doesn't go with anything, you're stuffed. So you just got to be very, very, very careful with Swiss franc at the minute, especially with something like the US, where they change their mind on direction every 5 minutes when the wind blows. So good levels of support and resistance again, confluence with RSI extension or ADR extension, no problem, but you've got to be prepared to be in it for a couple of weeks if it's wrong. There's going to be plenty of times where it's not a problem. Yeah, you got in there, you got out here. Yeah, you got in there, you got out. You got in here, you got in a second time, you got out. Then you got in and you got out. So, you know, it's totally tradable, not a problem. But if you get in and you can't get out, you have to get in again. And if you didn't quite, that would have been a break even. Yeah, probably wouldn't have got out there, would you? So then it came down again. You may or may not have taken another trade there, but it still didn't pull back enough. And then it collapsed. Yeah, look at that RSI extension. Almost hit naught. Never hits naught. That's just what happens, isn't it, sometimes with the Swiss. So just got to be careful with it at the minute. It's too volatile for position trading, I think. For, you know, breakout trading and things like that, with a stop loss, you could get some massive profits on it. You never hold it that long. You won't hold that whole position, obviously. You just take you'll be out down here thinking, holy crap, that's gone really fast. It's going to pull back any second, and it won't. So it's just not great to trade at the minute, US dollar Swiss. So let's a quick look at what's going on the indices. So we've stalled out at 4R on the DAX. We've completely retraced the FTSE. So look at that for an exit today. Beautiful. Yeah, so all stalled out. US indices the same, stalled out. So it was just the initial cash balance today. This is what I said earlier. Yeah, when you get a gift, take it. Yeah. You know, that is the initial cash balance. When it's done more than 20% or 30% or 40% of its average daily range in 5 minutes, it's going to be tired. Yeah, there's not a lot of volume left in the market. So you know, you get a bit of continuation today. We had a nice 1 3/4 R continuation, but you're going to get tired. It takes an awful lot for the market to continue a move like that for an entire day, like it did yesterday. Go and look for days like that. They're not often. You don't find them very often. Yeah. So this is why we trade the open. We trade the volatility and the volume that comes at the ringing of the bell. The rest of the day is usually flip-flop, 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 which is where everybody gets killed. It's the whole edge of the strategy is we're looking for momentum breakout. Morning, Mark. I think some pairs that are more volatile, it's worth reconsidering the ADR for scale-ins. Yeah, you could do this. If you mean increasing ADR for scale-ins and not using 0.75 or 1 ADR, you could use a higher ADR. The problem with that, increasing the ADR distance between trades, is if you look at the US dollar Swiss, yeah. So if you get in, what's an ADR? 59. So that's an ADR, roughly. So let's say you got in long there. That's 1 ADR. That's 2 ADR. 3, 4, 5, 6, 7 ADR, isn't it? Whoops. So it's roughly 7 ADR, that move. If you were to say, instead of getting in 1 ADR apart, I'm going to get in 2 ADR apart. So you get in, that's completely wrong, isn't it? Get in there. 2 ADR apart. You will be in less trades, but your ability to get out of the trades is massively hindered because the average, instead of being here, it's here. So your average is always going to be much further away. So when you get into your third position, so there's your first entry. If you got in 2 ADR apart because it's more volatile, there's your second entry. So your average is here. By the time you get your third entry in, I mean, again, we're assuming you get some kind of reversal at ADR. This one, you probably wouldn't have had another reversal until down here somewhere. So you would have not got that entry there because there was no entry. There was no bullish movement there. So even if you had have got an entry there, that is your average. So you need a 2 ADR move in your direction just to get a break even, not to make any money, just to get a break even. And if you miss that entry and you didn't get it on until you're down here, your average is up here somewhere, which is probably 1, 2, 3 ADR away. You need a 3 ADR move, an entire week's range, just to get a break-even entry. Exit. Yeah, so this is why I've never had spacing any more than 1 ADR apart. It's 0.75, somewhere between 0.5 to 1 is the sweet spot in all my testing. Every time I test anything to do with mean reversion and position trading strategies, it's always somewhere between a half to 1 ADR is the sweet spot. Anything below half an ADR, drawdown goes explosive. Anything above, the number of trades drops dramatically and the drawdown remains high for longer because you can't get out. You've got to give yourself an exit. So before I developed the EA, all of my trading was done not using ADR spacing. It was, and this is how I teach in the bootcamp, it's done using level spacing. So if you were to get in here on a long, for example, yeah, there is nothing here you can use for any support resistance. So if there was support resistance somewhere down here, for example, like that, I would be saying that would be my second entry. The distance is irrelevant. What I'm looking for is price to collapse through clean air to an area where it will bounce. The bounce is what gives you the average distance. And what you're looking for then is a 50% retracement on the leg that you've just got into incorrectly to retrace to get you out of it. Yeah. If there's nothing but clean air, you have to use a measurement. You've got to pick one. How are you going to tell? You can't. There is nothing here to say this is where we're likely to bounce from. You can go up a time frame. And then from there, you'd be saying, right, here is our next support level. Yeah. So that distance is, let's say we got in roughly there, 87. So that's 1.5 ADR. So that would be my next entry, not because it's 1 ADR, not because it's 3/4 an ADR, not because it's 2 ADR, because it is an area of interest on the chart. Yeah. But EAs can't find areas of interests on a chart. It can find weekly levels. Yeah, it can find daily levels. It can find monthly levels. Finding accurately decent support and resistance areas is discretionary. Not something you can teach in EA because everybody's going to have a slightly different variation of it as well. And how far do you go back? Which time frame do you use to analyze it on? If you've got one on the hourly and there's one on the 4 hourly, but the one on the hourly is there and the one on the 4 hourly is there, which one do you use? Pick something in the middle. Okay, well, what if they're too far apart? Yeah, there's so much logic, and the logic can have thousands of variations. It's impossible to do, which is why I always say you cannot fully automate any strategy and just let an EA trade and make you money while you sit on a beach. If it was the case, we'd all be doing it. No one's doing it. Everybody that you see, my God, not Telegram, TradingView the other day, I went on to TradingView. What was I looking for on TradingView? News indicator I was looking for. They had a news feed. There it is. Look at this crap, right? Talking about sitting on a beach, drinking a Mai Tai, having, look, who's this guy? Beautiful. Who's this guy? Sitting in an expensive car. Who's this guy? Sitting by a pool. Who's this guy? Trading by mountains. Who's this guy? In London. Probably sitting on the South Bank, having a beer with his mates, happened to have his laptop open. Don't know what that guy's up to. But look at this. Beaches, money, selling the dream, not trading the dream. They're selling the dream. I was just looking through it the other day and I was like, this guy obviously hasn't made it. He's got a crappy old, this is a generation 1 or 2 iPad. Very old. Tell, because it's got the black corners. And he's got a campfire. So he's obviously homeless. Got Wi-Fi wherever he is. Maybe he's at Centre Parks, I don't know. But I was just looking through it and thinking, all these people with their profile pictures, and they're all like trying to be the guy by the beach. But you can't sit on a beach and do detailed analysis like this on a tablet. Yeah, it's just pointless, isn't it? But it just made me laugh. I was like, ugh, still selling the dream. But yeah, so that's why if you're going to trade the Swissy, expanding your ADR distance for positions is not the answer. You're better off just using the other instruments and forget the volatile stuff. There are ways to make money out of volatile instruments using stop losses because you're going to get bigger movement. So let your trades run more. Use a moving average stop on them, or use a 9 or a 20 MA stop on a trailer. Yeah. And you'll get a very nice trade on a breakout. But the problem with these sorts of instruments when you get to this type of thing is you can't predict when this is going to happen. So it is, this is where everybody goes wrong with trading, isn't it? You'll try and predict something happening and you just get stopped out over and over and over and over again, which is why stops are pain in the backside. But I don't know, just hard. The Swiss is going to be difficult, I think, moving forward. Their interest rate differential is so different. And again, as they always do, and as they've been proven to do in the past, they continuously change their interest rates without telling us. So they dropped the interest rate without telling us. They did it again without telling us. Their inflation figure is at target or below, well below where they want it to be. So there's arguments for dropping the interest rates further, but they won't tell us. They'll just do it. And when they do it, it sends the Swissy into crazy mode. And Jordan has come out and said, if you send us into crazy mode, we'll press the button in the opposite direction when we fancy it to stop you putting us into crazy mode. Yeah. So it's just something that is going to take off. If you're position trading it the wrong way, it doesn't matter what you do, you're just going to have to take losses. And to be honest, there's so many other instruments out there that are more stable at the moment. You don't really need to trade the Swiss. And very similar to the yen. The yen, though, it's gone the opposite way, hasn't it? Yen's got into holy crap, I can't move mode, which is just as bad. There you go, it's going back into profit. So yeah, I don't know. I think it's more the idea you can access TradingView from anywhere. Yeah, but it's people's profile pictures, isn't it? I can access it from anywhere. I know I can. But if I'm going to access it from anywhere, probably best to be on holiday when you're on holiday, not trying to do your job while you're on holiday. Or, it's just, but it is the typical thing, isn't it? It's everybody that sells you a course is doing it from a beach because they've proven that they can make millions trading from a mobile phone on a beach. No, you can't. You made it all from selling courses. On a side note, I was testing ADR reversals with a stop loss 1 to 1R using Position Trader EA, and the results on a lot of pairs was good. Yeah, it will be. Test it with 1.25R or 1.2R. You'll find you'll get even better results. With RSI, with ADR extensions, depending on the extension you use, obviously you're going to get different results as well. But it's all about the bounce. This is what ADR is all about. The probabilities reduce dramatically the further you go in a day. So if you're targeting a small move, and that 1R is going to be based on the size of your stop loss, obviously, you'll easily achieve it. So, you know, a quarter ADR stop loss or a half ADR stop loss is very easy to get back. When you move an ADR, pulling back half an ADR is the norm. Pulling back a quarter of an ADR or a third of an ADR is above the norm. The difficulty with the ADR reversal is the level. Which one do you pick? For me personally, 125 to 150 is a real sweet spot. When you look at the ADR dash, the vast majority of days we get decent movement. You'll find movement up into here. Yesterday we got movement everywhere because it was a monster day. Those days you're going to get, everybody gets run over on these days. You just get run over. There's nothing you can do about it. They're lost days, which is why you keep your loss small, but your reward has got to be higher. If you're using any stop loss strategy, you've got to have a positive R. So even a 1.2R is going to give you much better results than a 1R. Yeah. Because 90% of the time, if you're going to achieve that, you'll achieve that. And that 0.2 means that every 5 trades, yeah, you're making extra 1R. Which, if you're trading intraday, probably getting multiple trades a week, aren't you? Many multiple trades a week. That builds up to quite a lot of extra profit. But you will have periods when something goes into a trend where you're going to get trend flag, trend flag, trend flag. Those might not be 1Rs. So try 1.1 or 1.2. It's in the position trader EA when you're in the strategy tester testing it. So your percentage of ADR to take trades, you can alter that obviously, but the 0.25% are the ones we use. So you go 125 as a starting point, or 100 if you want to, and then go 125, 150. So that's going to test all 3 of those levels. Sorry, that's 25. You want to go up in increments. So you're going to go 100, 125, and you're going to stop at 150. Your stop losses. So drawdown control. That would be an interesting test to do, actually. Setting that to 1 trade. Because what's going to happen is you're going to get an entry at ADR. When it pushes up and takes a second entry, if that first one's invalidated, what you're going to do is you're going to take a loss on that first trade at whatever level the second trade is taken at. That's an interesting test to try that. Set that to 1 and true. Don't use drawdown control. But if you're not going to do that, obviously that's another test. Do all of them. But yeah, setting that to true. And then you would use, if you're risking 1% over 1 ADR, you need to do the calculations on this, but obviously you need to get out of your drawdown control at a whatever distance. So you wouldn't want to use that much, would you? So 1 ADR over 1% over 1 ADR, that would be half an ADR. And that would be a quarter of an ADR. So that if your stop loss is a quarter of an ADR, you'd set it at 0.25 and set that to 1. 0.5. Easy test to do. Obviously make sure you just got it on ADR reversals. Might do that test actually. So the distance between trades, you'd also need to set. On at 125. Wouldn't use a lot of multiplier. So you'd have to have additional trades at a quarter of an ADR, wouldn't you? It's making this up as I go along. It might be absolutely terrible. Half an ADR seems too tight. Go at least one ADR. But then you're looking for one ADR retracement, aren't you? Which is a lot. Yeah, so if it doesn't happen the same day, it's just going to start to scale in after the ADR move. But if you've had an ADR move, it's likely to be mean reverting anyway. So did I set a target? I didn't set a target, did I? Exit targets, 0.5%. Yeah, so I'm getting in 0.25%. I'm looking for 0.5%. So that's actually a 2R, isn't it? Ish. I'm not going to have multiple trades, so that doesn't apply. So I'm going for a 0.5 R. Let's try that. Try it. Again, these are all, you know, I'm not an advocate of stop loss strategies, obviously, but if you got something with a positive R, should be profitable. What are you doing? That's good. So every loss is based on when the next trade is taken rather than a stop. So you're not using a fixed stop. What you're saying is, get me into another trade after we've got in, whatever distance that is, shut out my first one. So if you've pushed 125 ADR and then it continues to push 125 ADR without retracing half an ADR, yeah, we'll take whatever loss that first trade is until the second one is taken. By then, you've moved at least 150 ADR from the base of the move. So it's highly likely to get the mean reversion. The mean reversion is twice loss. But, I don't know, you're going to get instances like that, aren't you? Where you get a squeeze, wipes it all out. But it's not unprofitable. You'd have to run it over a longer period of time and see. The other thing is you've got to do it on M5 chart, really. Maybe M15. I don't even know what moving average I'm using here. I might be using a ridiculous moving average as well. Plan the test. But yeah, it's not bad, is it? You know, again, testing is great. Yeah, you look at this and you go, oh, that's not very good, is it? Why is that not very good? Go and have a look at that date. So you took a 125 ADR mean reversion trade after the US increased its interest rates without telling anybody. You honestly would not have taken that trade. Yeah. The EA will take it and go, holy crap, I don't know what an interest rate is. You'll be going, well, of course it's going to rally for days. The interest rates just change without warning. Yeah, you're trying to mean revert a steam train. You've got to look at the instances. You know, this is why backtesting is useless, because everything that's ever happened here is never happening again. The order of the candlesticks, the news, the bias at the news, the weight of orders at the news, every single candlestick has got a completely different outcome to every candlestick that's ever come before it. So all this is telling you is it good to use this or that? On average, you still got to pick the entries. Otherwise, you know, there's no indicators that work, because the indicators don't know what the fundamentals are. They don't know why that drop happened. What it's telling you is there's been a drop. I know that. Why did it happen? Interest rates changed. Do you want to go long? No. What I want to do is wait for a pullback and go short. I want to use a pullback above the 50 RSI and short it. That's what I want to do, but that's not the strategy we're trading. Got to be able to have a human being involved. It does work. You know, it's not lost money, is it? But, you know, you take out the idiot factor. What the hell are you doing taking 1, 2, 3, 4, 5, 6, 7, 8, 9 trades? So you've lost 10 trades in a row there because there was a massive news event. Yeah, look, propulsion gap. That's a news event. Yeah, that isn't. Let's just pause it there. Yeah. The reason for that move is not a normal ADR move, is it? That is a normal ADR move. Yeah, to 125 ADR. That is a normal ADR move to 125 ADR. That is a normal move to, well, I don't know if it's what ADR it is, but that's a normal move. Yeah, that is news. The size of that move in one candlestick, followed by a massive rally off the back of it. That's a news event. That is a fundamental shift in market structure. You don't short against that because there's a news event cause. There's a whacking great propulsion gap on the hourly chart there telling you we don't want to trade against this. Yeah, that short, you could have a go at it. You would have got maybe a quarter of an ADR out of it, but you don't keep selling it day after day after day when the thing confirms the direction of the move from the fundamental. Yeah, so, you know, idiot factor. Look at this idiot factor going on. Yeah, continuously shorting. That's obviously news. When's that? The 4th of February, 2021. Beginning of the month, could have been anything, but go back and look at the 4th of February, 2021. There's a news event that day. But, you know, overall, it's a sound strategy. Always has been. You know, this is why it's in the bootcamp. It is a sound strategy. ADR reversals is a sound strategy, but not when there's a fundamental. The reason I'm long on this today is because that's not a fundamental. No, the Aussies didn't come out and say we're dropping the interest rates next week because we're panicking. The Japanese didn't come out and go, do you know what? We're going to put our interest rate up to 1% because we think it's going too slow. That came down for no reason you can find on Financial Juice, other than it seems they sold off the stock market, which means they got to put it into a safe haven. Why did they sell off the stock market? Don't know. Maybe it was driven by Nvidia's court summons. But that Nvidia court summons is not a reason to sell the entire NASDAQ. That will revert. If that was a news event and it went like that in one candlestick and then it did that, you'd be thinking very much about that is probably going to do that, because they sold the crap out of it for an hour and they're probably going to add into that sell because there's a reason for that. There's not a reason for that. Yeah. So, you know, any testing you do, when you look at your testing results, always look for the reason behind the failure. If there is a failure, like Aussie New Zealand, I always use this as an example because it is a really clear, cut and dry example of a fundamental shift. Yeah. The normal, lovely market structure that I had been milking for 2 years or a year and a half shifted at that point where I bought it because the Australians changed their interest rates. The New Zealanders didn't. The bias became short. Yeah. If you look at your results and go, this thing was buying the crap out of it all the way down there, the strategy doesn't work. No, the human being doesn't work because the human being hasn't identified the reason the strategy failed. You don't keep buying when an interest rate drop comes unexpectedly in 2022. It's just, you know, or whatever it was that happened, interest rate rally, wasn't it, on the New Zealand, I think. But your results will go down the pan. But it doesn't mean the strategy's no good. It means you're not paying attention to fundamentals. And that's what makes this thing go up and down. So you've got to take those results and filter them for you as a human being. Yeah, and what you would do in that situation. And if you don't know what you would do in that situation, then that is what's going to happen to you. But there's nothing you can do about that but learn. And that's part of the job, isn't it? Becoming cleverer. On a side note, I was testing ADR reversals with a stop loss 1 to 1. I've just answered that question. Yeah, so using a 1 ADR stop, the trouble I think you'll find with, I mean, if you found good results with it, that's fine. But So that would be 1%. Oh, so you'd be closing out all of the position at 1 ADR without scaling. And you'd need to target 1 ADR. So the scaling needs to be set to 1.5 or something, which means you won't get one. What's the MA? It's a 9 MA. You probably want a slightly tighter MA. You want to get in fast because it's an ADR reversal. Let's use 15. That was that news event again. So these are taking a long time. The whole idea of ADR reversals is a quick exit. These are taking a week. But that's because you're using a big stop. But again, that's nothing wrong with that. You're letting the trade breathe. You're letting the market move. But this has obviously got a positive R, a strike rate, a positive strike rate. So the danger of this strategy, obviously, is if you get less than a 50% strike rate, it becomes unprofitable, which is why I say if you up the target to 1.1 or 1.2, even if you have a negative strike rate, it still gives you a positive return. Or reduce the drawdown. Again, these are things, this is what the optimizer is for. Run a test with 1 ADR, stop, run it with a 0.9, 0.8, 0.7, 0.6, and a 0.5. If you say the 0.5 is too tight, that's fine. That will prove that result. But try a 0.6, 0.7, 0.8. Don't forget, when the market moves in ADR or in any way, it usually retraces 50%. Yeah. If you use a 60, a 70, 80, or a 90%, in this case, it would be above, wouldn't it? Stop of ADR, it spends 58% of its time within ADR. These ones are probably going to be just as effective as using 100% of ADR. However, your risk reward ratio, if you're using 1 ADR as a target, has suddenly gone up to 1.2 or 1.1 by reducing the stop. So you don't have to increase the target. Just try different increments down in the stop loss. And just look at, if they all work, that's robustness testing. That's what we're after. It doesn't matter whether you used 100, a 90, an 80, a 70, or a 60 as a stop loss. They all came out profitable. That's robust. Doesn't matter what stop you use. If you're using the same target, but try it also with a target of 100, 1 ADR, 110, 120, and also try it with a target of 90, 80, and 70. So all of those combined, using 3 or 4 different stop loss variations and 3 or 4 different TP variations, if every single one of them over the period of the test comes out as profitable, that strategy is robust, because it doesn't matter whether it would slip, it wouldn't quite get there, it got a bit further, it doesn't matter what happens, they all worked out as a profitable strategy. It's testable. Use the optimizer. That's what it's there for. But you're going to get runs where the market is range bound. Don't forget, mean reversion trades 80% of the time will work because the market spends 80% of the time in mean reversion, either mean reversion in a trend or mean reversion in a range. Parabolic trends, where you get flag breaks, are not what we're going to make money. This strategy is not going to work. So it is going to have drawdown, but that is a period in time where the market was range bound or slow trending. This is a period in time where it was strong trending. Again, all of this is great, but what is it going to do for the next year? If it's going to strong trend for a year, your P&L is going to do nothing but that. If it's going to have periods of both, you're going to get mixed results. If it goes stable or nice, easy trend, it's going to be that, isn't it? But this is what mean reversion is. And again, why I say it doesn't matter if you use ADR, it doesn't matter if you use RSI, if you want to use a CCI, a MACD, a stochastic, whatever you're using to measure price having gone a direction, our whole premise is mean reversion, because that's what it does most of the time. It doesn't go like that forever. Look at that one there, big drop down. It did pull back. Unfortunately, you got stopped out just before it pulled back to your target. So then you can go, well, if I'd use a 1.1, I wouldn't have stopped out there. But what would you use today? You can't pick the stop based on what's happened in the past, because it's not going to be the same in the future. The P&L looks good. I'm going to just drop that down so that it draws the graph. Yeah, there you go. This is testing post-COVID. So this is my post-COVID test, which runs from May 2020 until July this year. So it's 4 years worth of testing post-COVID. So that's what period this is. It's not even halfway through the test. So you need to let it run, obviously, for the whole test. But this is 15-minute time frame. But there's the settings. If you want to screenshot it and go and test it. Looks good. So your strike rate is 57%, 63% in total. So 57 shorts, 69 longs, 63%. So we're using a 1-to-1 risk-reward ratio with a 63% target, 63% strike rate. So as long as you've got a positive R, 1-to-1 works. But it's never going to set the world on fire. But, you know, that sort of strategy where you've got a high strike rate and a low losing run, those are the ones where you up the risk. Yeah, go 3% risk. Now you're making some serious money, assuming that strike rate remains. But even with the higher the risk, if you're getting a 45% strike rate, you're going to make a loss in the year. But the loss isn't going to be huge, is it? Because you're going to have all those winners. Trading stops you could also use. Other things like, the human element. Yeah, we entered a short here. Yeah, it pushed down. The target was here. Or no, let's do realistically. The target was here. Yeah, we got to here. Yeah, and they were just releasing non-farm payroll. What would you do with the profit there, your target there, and your entry there an hour before non-farm payroll? You shut it. You take all the money that's free there that you can go and spend in a restaurant, rather than hope it gets that little quarter of an ADR further. Yeah, so many of the trades that you will lose because a news event caused them to go against you. In the real world, you look at your P&L before non-farm payroll and go, holy crap, I've got 2.6% profit there. It could all go down the pan in an hour's time. Put it in your P&L. Yeah. Again, this is not going to replicate what you are going to do in real life. If you're going to set it up on a VPS and let it go and let it run, fine. But you're probably not, are you? If it's real money, you're not anyway. Anyway, I'll leave that one there. You can go and play around with that. So that's all I got for today. I'll be back tomorrow afternoon. So lots of news coming up today. Obviously, 2:45 this afternoon, Bank of Canada rate. We kind of knew they were going to drop it, so might not do anything, but it might do. Tomorrow morning, you've got Bullock speaking as well. We'll be discussing the GDP numbers from this morning. So you may get more volatility on that Aussie. So any Aussie New Zealand exposure you've got on in the morning, be aware of that. Other than that, yeah, we'll be back tomorrow afternoon. And we've got PMIs and unemployment claims, which will be half done by the time we get here. And then the rest of it comes out after. So interesting tomorrow. And then obviously non-farm payroll on Friday. So, and then obviously next week it all starts to kick off. So have a good day. Hopefully it's profitable. We've just had the UK composites come out as expected, which they normally are, which is why they're orange. But yeah, so I'll be back tomorrow afternoon. I'm looking for more exposure to get on, but obviously I'm just paying attention to the dashes. So if nothing's moving, which it isn't at the moment, I'm not taking anything. There's no real obvious levels coming up that I can see on anything apart from the ones I've pointed out today. So got a long on there. And we'll wait and see. I might go and do some testing on ADR reversals with a stop loss using the Position Trader EA this morning, seeing as AZ seems to have found a nice little edge. But I will test it. And if it's any decent, we might stick alive on it. But we'll see. See what happens. Right. Anything else you need? I'll be in Telegram or Discord. Other than that, I will see you next time. Have a good day.